Okay, folks, we are, Monday, the 7th of November. Lots going on in the markets, midterms in the US. And Craig Sheehy Kelly here with us to talk psychology. Some things have changed now. Craig is now part of Duggan Capital team in a way. She's going to be working with us to focus more on our trading psychology for the team traders. And I know we're all really looking forward to working more with her. So, how are you doing?
Hi, Tim. I'm great. I'm delighted to be here and very excited to collaborate more on trading psychology. And, you introduced me to it. So I have to say, give you that credit. And I'm very glad you did. Very happy to be here a couple of years later and have the opportunity to collaborate with you.
So you just recently moved back to Ireland, the motherland, from Portugal. So
Yeah. Yeah.
not a
It's,
lot of people go from the sunshine back to the rain, but
I know I
you
can't
missed
promise
it.
I'll be here for that long. The sunshine might call me back, but it's the right thing for the moment. So.
Right. Well, delighted to have you back in Ireland. So yeah, so we're really just here to talk about psychology, and maybe we'll do quite a bit more content that will be free for people to access. But we were just thinking we get something recorded, and one of the topics that we were talking about in the room today, one of the traders lost quite a bit. Well, not a huge amount, but was certainly in a negative P&L in the morning and really spent the rest of the day fighting to get it back just slightly positive. And I found myself we were having a good conversation about how this is really common. How people come in the morning, they kind of are skipping a little bit ahead in that OODA loop of, observe, orientation, decision, and action. They're kind of skipping a little bit and they're facing a drawdown in the European session, comes to the US session, and then they're really focused. They're taking good trades, putting in really good performance. But net at the end of the day, they're knackered and they're coming out about flat. What do you reckon? How do we stop doing this? How do we stop beating ourselves up in the morning and then coming out flat today?
So it's definitely a really common, I'm going to call it mistake, or like, it's not an optimal way of trading, let's say, because if you do that, if you take that approach day in, day out over time, that's going to really eat away at your profits because you might be able to pull it out of the bag on some days. And then, even if you go off track at the start, you pull it back and you're slightly profitable and it's fine. But guaranteed, if you take that approach every day, there's going to be days where you have massive losses because it'll be the day that you can't pull yourself back. And what I found is that this is the contradiction of this, or the reason why it's such a common challenge is because it sometimes works. So it's like you get this feedback that, oh, actually I can get away with this. And then over time, it's what really stops you from actually growing your account and, growing your profits. And in terms of fixing it, there's a few different pieces to the puzzle, but the main one that I'd say is that when people are doing that in the morning, so when they're over trading in the morning and they're deviating from their plan, they're basically trading based on the P&L as opposed to their process. And that's one of the biggest challenges for traders. And it shows up in so many different ways. Like this is one example of it, but it can show up in every other way, from hesitating to take trades, to jumping out of winning trades too early, whatever. But when you're
Mm.
focused on the money and not the process, that's when you're likely to break your rules. And that's the biggest challenge to overcome in this. I don't know what your thoughts are on that.
Yeah, trading P&L, it's a real, it's like the specter of that is always there for the traders in the room that, they are just trying to trade around the P&L. And actually, something I attach to that as also problematic is actually not having targets. Because if you're okay, it's fine. If you want to look at your P&L every 5 minutes, well, what are you expecting every 5 minutes? Where are you going to look at it and you're going to go, okay, I'm done. And the answer to from 90% of the traders that come in for training and are in the retail space, the answer is, I don't know. What should it be? And they don't have targets. Um, and so, and again, but stepping back to the front of the problem is, uh, as you said, you're not focusing on the process of looking for good trades, staying with the winners, cutting the losers early. You know, you depart from that process when all you're doing is like looking at the figures and going, okay, am I still positive, or how negative am I? And then, you know, the question becomes around the, you know, the fear. It seems to be, you know, and maybe you should talk about that more, about the fear, the fight or flight response. And, you know, how much am I putting at risk? Am I putting the entire book that I'm trading at risk? Or am I just risking my 3% or 1% for the day? Um, that is kind of interesting. Like, you know, when is too much too much? And
I
that, I suppose that's when you're broke and you can't, your
there
margin called, right?
there's so many points, like you could go into each of these in detail, but I think you've made a really good point that actually before you ever go into the psychology, like the in-depth kind of, are you self-sabotaging, where's the fear coming from, you have to have a solid plan. Like that is the first piece. And actually I've come across, I come across a lot of traders in my line of work, and they're all at different stages. And when people are closer to beginning their trading career, they can sort of underestimate the value and the necessity of having such a clear plan, like not just in your head, but actually written down in detail, and probably having someone also look over it, like, having a mentor to kind of give that feedback, or say, okay, but you're missing these pieces here. Like, what about partially out of trades, or are you managing your risk correctly? Because I've seen people that have not no concept of risk management, but they're, applying just completely risk management that's basically like gambling, and they're not even aware that that's an issue. So I think that's the very first, before we jump into all the depth of the psychology, that's the most important point, is make sure your plan is solid and make sure that it's profitable. So in theory, if you back test it, you can be sure that this approach, this strategy or technical approach, is profitable over time. And then the issue is just you executing it. I think that's like the most fundamental piece that has to be in place. And I know you help
Mm.
traders with that as well.
Yeah, well, absolutely. Edge developments. I mean, you know, it's very easy to kind of develop very simplex type of trading strategies at the start. But if you want to have any kind of endurance and kind of cadence as a trader in developing your book, and you generally just making profits, whether it's month on month or year on year, you have to be following an edge. And I think the one thing that is agnostic across all parts of trading, including the edges, the different edges, is risk management. Because I trade I trade intraday value, and I trade across like VWAPs, and I scalp, right? They're kind of three different edges in a way. And we certainly teach those on the training course for the firm. But the one thing that is agnostic, that is exactly the same for any of them, is risk management. You know, risking 1% of your book, or 3% of your book on a day. So you're really looking at maybe 0.5% to a full percent per trade. And then, obviously you're looking for 3 trades in the day, or, 6 trades, a 0.5%, something like that. But yeah, risk management is definitely something that people like. It's the last thing. I mean, I remember when I was starting out as well, people go, well, risk management, you gotta have that down. I'm like, yeah, risk management, cool. The maths of, the 3 to 1. I need to be looking for 3 to 1s minimum if I have a win rate of 33% plus, and all that stuff. But actually, it goes so much deeper than just that. What's my win percent, and what should I be looking risk return wise? You have to sit down and work out the maths of what is the size of my book that I'm putting at risk. Okay, what is 3%? What is 1%? Okay, 1%. All right, if I'm trading on oil, how much of a stock can I afford on, say, 2 contracts in oil if I have 1% risk per trade? And you have to sit down and you've got to work that out. And then you have to like totally be aware of that when you're like putting on a trade, things like that.
You
But
also,
so, and hold on, and this reminds me of something Tony Robbins said. He's like, why do we basically not do what we know? We know what we should do, but what I'm really interested to hear from you is, why don't we do what we know?
Well, that's basically what my job is, because you know this, I don't trade yet. I do plan on learning fully, but you know, so my expertise is really in helping people to understand when they have this part in place. So they've got the plan in place, it's written down, they know what they should be doing technically, and then inevitably they go into the heat of the market and they're under pressure and they just don't follow it. And so that's basically everything that I do boils down to helping people follow what they know they should be doing. And there's lots of different reasons why people don't do it. But one thing that you mentioned, which is kind of crucial, is people's expectations. So you were mentioning that in the context of, you know, what do they expect to get from a trade, how much is enough, all of that. But even broader than that, people start trading, you know, I find, and they have unrealistic expectations of how long it's going to take to be successful. And they think that, you know, right, I'm giving myself a year
Yeah.
and then I'm going to be replacing my salary and I'll be retired from this job that I dislike and I'll be trading full time. And if it doesn't happen in a year, you know, so every time they go into the market, they have this kind of year time frame in their heads. And it's completely unrealistic because it's a profession. You know, a lot of people have the goal of trading full time or replacing a full time salary with trading or really supplementing their income. And if you want to do it to the level of professional, then professional in terms of your income, then you have to treat it like any other profession. And there's no profession in the world where you just do a year of training and you're qualified and you're killing it and making a really good salary. So when you put unrealistic expectations, not necessarily on your goal, like I want to make this much income, like that's possible, but putting the time frame of a year or whatever time frame is very short on it, you're heaping this pressure on yourself, and then pressure makes you more likely to make all the mistakes, to deviate from your plan. And then when you combine that, so this is something I talk about a lot, I'll kind of shorten it here, but willpower is not the answer. So people think if I could just drum
Mm.
up more willpower, then you know I could trade like a robot, and that's what's lacking. It's just I need to kick myself up the ass and have more willpower, and that is absolutely not the case. So willpower kind of is a fallacy in this context. When you're
Mhm.
breaking your trading rules and it feels impulsive, it's actually that your subconscious mind has taken over your trading. And this is a whole deep complex subject, but that's what's happening. So when you find that I know what I should be doing and I'm not doing it, you can be sure that there's some element of your subconscious mind, so some kind of limiting belief or fear or mindset that doesn't support you, has come out under the pressure of the market and has taken over your trading. So to make that concrete, some examples of the beliefs that, you know, are sitting in people's subconscious mind that causes them to break the rules might be around, you know, I can, uh, let's say achievement. So they're kind of equating their self-worth with achievement in trading. So then when they take a losing trade, it's no longer about the money that's been lost. They
Mhm.
actually feel like a failure. So it's a threat to their self-concept. So when that happens, then they can't leave it as a red trade, a red day. Like, so this feeds back into what we were talking about at the start. People are
Mhm.
so averse to a loss or feeling like a failure that they'll do anything it takes to try and get a winning trade, have a green day. And that's when they get into trouble of, you know, taking these actions like over trading and then having to pull themselves out of the hole. So even trading themselves out of the red where they should just cut their losses and
Mm.
now, okay, that's that, I'm finished for today, it's a red day. They stay in because they don't want to accept that it's a red day because it means that they're a failure. So that's how our beliefs and expectations in our subconscious mind can feed into what we're discussing here and other ways that you break your trading rules.
Mm. So that, yeah, I mean, I've gone through all that before, and it's always there. Like if I hit a downside limit, it doesn't stop me from still looking at, you know, this market or that market and God, oh, I like the look of that. Um, but what I do is I instantly, if I am in that limit drawdown, I instantly kind of put my mind in back into the kind of horror scenario where I might be martingaling into a market that's coming against me. You know, I'm scaling into a drawdown and then just hoping to average out, and just the sheer stress and horribleness of those, you know, experiences. And I just remember all that, and then I instantly go, yeah, I'm out of here and I'm off the desk, or I'm like locking myself out of my system for, you know, however many hours. And yeah, I mean, it certainly, I think it disturbs me how, you know, willpower has no power against this sort of stuff. Could we talk more about like I don't know, just how to manifest something that is powerful against this sort of problem, where you're thinking, oh no, I just need one more trade, you know.
So there's no quick solution, and I'd love to be able to say, just do this and it'll be fixed. But it's actually about using a whole system. So, I mean, I will give some tips, but it's important to reframe this in the right context. Again, like a profession, you've got to learn all of the pieces of the technical side, the mental side. So if we think of professional sport, athletes don't just work on the technical aspects of their sport. They don't even just work on their hydration or their nutrition. They also work on the mental side, and they're building up their confidence and their resilience under pressure, all of that. And when they combine all of that together, that's when they get serious results. So it's the same with traders. So to be able to fully stick to your trading plan, it sounds like the simplest thing in the world, but every trader knows it's not. The way to actually really get consistency and 100% discipline is to work on all of the different aspects of your mental edge. So actually to approach it with a systematic mindset and with the right tools, of course. The same way that you learned the technical aspects of trading, you didn't learn it overnight. You didn't just focus on entries or just focus on exits. You actually learned everything, pieced it together, got more fluid in using it, and now it works for you. So it's the same with the mental side. You've got to understand what's important, what might be tripping you up, use the tools to overcome it, and then let that become an integral part of your trading. So there's, in terms of the subconscious stuff, so your subconscious mind it controls 95% of your behavior. So you got to get familiar with what's in there. And this is the piece that people don't really like to do because it's a bit icky. People don't like their emotions. They don't want to go digging into what might be sitting in their subconscious. But to me, to simplify, all of the pieces of the mental edge puzzle, there's the surface strategy. So things like you were saying, you remind yourself of the horror of what this could be, and that is enough to just
It's actually associated with a sensation of nausea. That's sort
Okay.
of what I
I
find
definitely
works
would
really
suggest
well.
there's probably
Because
nicer ways to do it, but if it's working for you, fair enough.
it just helps me to stop thinking about it straight away.
So
So then I
what
go, oh
actually
yeah.
what you're talking about is you're disrupting an automatic process. So this, we call it dissociation, and it happens for a lot of traders. So if you go on, it happens when you're on tilt. So if you're in this kind of automatic pilot mode where you're divorced from the consequences. So let's say you're in there and you're like, okay, I'm going to check out this market, and I'm just going to keep going. I'm going to keep trading, and you're on autopilot. You start divorcing from the actual money that you're losing, or that you're putting at risk, and you're in this state of kind of dissociation. So it's like you're numb, and you can just take all the actions you want, and then at the end of the trading day, when you're away from your computer, you go, oh my god, what have I done? So the key to that is to work on two levels. So there's surface strategies that are very practical, like goal setting and these quick techniques to break that pattern. So what you're describing is a technique to break dissociation. You're taking yourself out of the numbness. You've chosen a technique that's pretty loaded and makes you maybe feel bad, but it's still working for you. So it is important to find what works for you. There's other ways to do that as well. But then you got to work on the deep stuff. And that means actually becoming very consciously aware of what scripts are in your subconscious mind. And these can be beliefs from childhood. And they're driving all of your behavior, but you're not aware of it until you go into the market and your results are facing it back to you. So there's going to be two types of traders. There's the ones who will ignore that that's important and try everything they can, on the surface level to fix it, but they can't fully, because you can't ignore your subconscious when it's driving 95% of your behavior. But if you are willing to actually go to those depths, then there's different tools you can use to actually, uncover what are those beliefs that are at the root. So it could be that, I never have enough money. I need to be perfect in order to be loved. And these might sound completely divorced from trading, but they're not. These are like very common examples that I'm using. So if you can, the hardest part is to get to the root, to understand what those beliefs are. And then the easy part is actually reprogramming them. So if you're willing to kind of put in that work, use the tools to analyze yourself. Once you know what's happening, it's very easy to reprogram using things like affirmation scripts. That's the easier bit of the journey. But to me, it's the reason why I think only 1% of day traders predictably profit net of fees. And there's research to show that. And to me, that's because lots of people will never address this piece. They'll get really good at the technical. They'll get stuck in a kind of loop of inconsistency, and they'll never do the last piece of the puzzle to to overcome that so that they can reach really strong levels of discipline and consistency.
And we went through that. You know, you brought me through that a couple of years ago, and it was phenomenal. And it was really interesting as well for me to go through that, and you know, introspective. I wouldn't say it was icky, but I could see how many, you know, maybe people would think that. And there's traders who have, you know, who are part of the team here, who have worked with you on the same stuff, and they just have found a whole new version of themselves from doing that. And you know, so yeah, really, really good stuff come from that. So brilliant. I mean, there's so many things that kind of came from that that I wanted to kind of also kind of deep dive on as well. But I think we're probably not going to have enough time in this session. But we can certainly, you know, get back on and kind of, you know, go into some other key common topics as well that traders kind of feel are at play with them and their own trading. And, you know, maybe we could kind of shine a bit of a light on some of those topics for them too.
Yeah, absolutely. I'd love to do that.
Okay, cool. Well, listen, thanks for your time, and we look forward to seeing more of you. And take care.
You too.
Cheers.
See you soon.